Hey, BiggerPockets land. This is Paul Moore going live. Hey, everybody. It's Paul Moore, and I am going live. And I've got my Robert Graham shirt on here. It says knowledge, wisdom, and truth, and I am ready to go when you are. So here we go. Hey, we're going to do a live session tonight with live Q&A. So I'm Paul Moore, and we're going to take any real estate questions that you have. So start typing them in. Hey, YouTube Live. Hey, Facebook Live. I need to know from both ends if you can hear me okay. So give me a thumbs up if you can hear me. Let me know if I'm coming through, if you can see me okay. I can tell I can be seen, but the question is, can I be heard? So let me know. And once I get a few, okay, I got a Scott Alley like. Hey, thank you so much. All right, hey, Kevin Stewart, welcome. Scott Alley, Kevin Stewart, Jared, J Rock. Hey, how are you? Jared. All right. So on the YouTube live side, I've yet to get a response. So let me know if we are coming through and loud and clear. So, hey, we're going to, hey, Lashika, hey, Tony, hey, Calvin, hey, Angela, I have great credit but no cash to invest. How do I get started? I've got a great answer for you, Angela. So, okay, great. Thanks, Jared. All right, so if I have any, okay, so YouTube says I'm coming in loud and clear. Hey, Dead Stockdale, James Siller, hello, Paul Lamario, sorry, Ines, Equity, Kevin, hey, D. Brooks, Jonathan DeBro, Hood Maddock. Wow, we are getting a lot of people tonight. This is amazing. All right, it is 8 o'clock Eastern, and we're going to get started. Mark Calder, show, how are you? Jonathan, what's up, Uncle Paul? Hey, John Jorge, thank you so much for joining. All right, Brett, hey there. So on the Facebook side, I think we fixed this, but if you don't get an answer to your question, please cut and paste it and ask it again. We should be able to be okay on the YouTube side, but on Facebook side, just put it in again if you haven't heard back, because I'm having trouble scrolling. And I'm not a millennial, but I know how to scroll. I really do. I even got a nice Apple mouse here. And so we're going to be doing that. But first, 10 more reasons not to invest in real estate. Give me a thumbs up if you want to hear 10 more reasons not to invest in real estate. Number 10, your life savings is also your emergency fund. You need immediate access to every cent of it at any given moment. Who knows, that's not going to work out. Number 9 reason not to invest in real estate. You prefer buying gold because you plan to be a pirate someday. Arr! Number 8 reason not to invest in real estate. You rather spend money on a fancy car that will be worth more in 10 years than it is today. Wait a minute. Okay. Number 7 reason not to invest in real estate. Real estate investing has too much jargon, and you'd rather die than have to learn any new terminology. Come on. Okay. Number 6. What's leverage again? Number 5 reason not to invest in real estate. You're too busy mining cryptocurrency. All right, how's that working out? Number 4 reason not to invest in real estate. You want your paycheck to be the only income you generate. Huh? Number 3, you would like seeing the red and green arrow. You like seeing the red and green arrows on stock tickers. Number 2, you don't believe in diversification. And number 1 reason not to invest in real estate, you don't want anything to do with cash flow. Go figure. Okay, so we've done that, and now we're going to get into our questions right now. So, all right, thank you, Zach. Okay, Brett, Frozen. Anyone else? Zach, you can look into that. I think we're good, though. Jeremy West, hi from Pennsylvania. Hey, Jeremy. I am getting a frozen screen again on my Facebook side. So if you put a question in Facebook Live, please ask it again. Arthur Holt. Hey, Arthur. Is debt to income a major factor in moving forward with more real estate deals? Yeah, you want a debt to income ratio that is acceptable to your lender. I'm not going to tell you what it should be. You should check with your lender on that. Debt to income ratio is important. Debt service coverage ratio is another important thing, and that's the ratio of the income divided by your debt service, and you want to be at least at 1.3 or better. Lenders will let you get by with 1.2. Thanks, Arthur. How do you know when it's a good area to buy multifamilies? Hoodmatic says. Hoodmatic, you can check with me on BiggerPockets. You can reach out to me. I can give you 22 criteria. They include a net population migration, positive, more people moving to the area than away, low unemployment, a diverse economy, not dependent on one institution like military, and there's about 18 other things on there, including the ratio of home price to rent, how overbuilt it is, all kinds of other issues. We want a large city because you want a large choice of multifamily property managers. And by the way, we believe that multifamily, 2/3 of your success will come from your location and a great property manager. So keep that in mind. C. Lopez, is there any plan of BiggerPockets to expand in Mexico? You'll have to ask Zach. I'm sorry. Thanks for joining us, though. Cynthia, have new builds in single-family homes kept up with the population in the last decade? Cynthia, they say they haven't, but I'm looking around and thinking that maybe they have, and I've heard that there's actually going to be a single-family housing downturn. So Google that. About a week ago today, I think there was an article saying there's a big single-family home downturn coming up. So that would be a good thing to do. Hey, Brett, okay, I'm starting on my Facebook questions. Where do you do your research on out-of-state markets? Thank you. I use Neighborhood Scout. Did I tell you that you can get a discount on Neighborhood Scout, which is the best tool that I know of for mining data? And it's through becoming a BiggerPockets Pro member. And so you can ask Zach Gwynn right now. He's here with us on Facebook Live for a coupon code to get a discount on BiggerPockets Pro. And if that doesn't come through right now, ask me offline later and I'll try to get it to you. Jesse Ortega, 15 or 30-year mortgages on an investment property. There's a great article on BiggerPockets, and you don't have to be a pro member to read it, saying why it's better to get a 30-year mortgage to build your net worth. And I would look that up. That was from last Wednesday or Friday on BiggerPockets. And so I'm going to have to go with 30 because that's what the article said, and it was a great article. How to properly use 1031 exchanges. Cedric Bailey, thanks for joining. It's rough. 1031 exchange means you can defer taxes till much later. You can trade one property for another, and you can defer the capital gains tax. The way to use it is to find a great intermediary, find a great replacement property. Get this, before you sell your current property, because it's extremely hard later, because you have a 45-day window to name 3 properties to exchange into and 4.5 more months to close. Okay? Try to find your property first. I got a little hint for you guys. If you use 1031 exchange after another, you're going to have a big tax bill at the end of the day. Number one, it'll be well worth it because you can accumulate much better tax-free than after paying taxes. I showed an analysis the other day that showed you can accumulate $5 million tax-free through 1031 exchanges from a $100,000 investment in 30 years versus $3.5 million if you pay the tax along the way. But I've got another little hint for you. If you move into the last property in your 1031 exchange chain, let's say you're 65 years old and you're ready to retire, or if you're a FIRE member on BiggerPockets watching the BiggerPockets Money Podcast, you'll probably be retiring much earlier. And on the last property, guess what? If you wait 2 years after it's become an investment property, they say you can move into that property. My research tells me you can move into it and never pay tax on it. You can be a millionaire and never pay taxes. Okay, that's what they say, and I believe it because I have a friend who did it. John Chasen, are mobile home parks still unattractive as an investment? Hey, John, thanks for joining us. Yes, they are. They're a great coupon clipper. They have a high cash-on-cash return. And one thing I love about mobile home parks and self-storage is you can find them in abundance. There's lots and lots of mom and pop owners around the country. And unlike multifamily and even single family now, Well, single family's a breed in itself, and you can always find some single family. But mobile home parks and self-storage, they're in a sweet spot below most of the real estate investment trusts, the REITs, and above the typical investor. So yes, mobile home parks are a great investment. Don't expect to do a lot of value add unless you find one 50% occupied, because there's not a lot of additional income you can add to a mobile home park. By the way, if there are mobile home parks owned when you buy the park, get those out of your name. I have people on BiggerPockets who will disagree with me because they're called metal boxes that spit out money. For some, they've been metal boxes that cause me a nightmare of headaches. Every single mobile home park, every single trailer, every single every single mobile home I've bought, and I bought 4 cash flowing mobile homes that turned into nightmares on Elm Street. Go look it up. It's awful. Jared, how many properties do you like to put under an LLC? Jared, ideally, as easy as it is to set those up, I would do 1 property under each LLC. Nicholas, hey, thanks for joining. What is your opinion on NNN properties, triple net? I think if you can find a good deal right now, it's a great property to have. And of course, that means that the tenant is paying all the bills on this, and you're just providing the building itself. And so if you can find a good deal, they're extremely hard to find good deals on right now. Unless it's in retail. There are some opportunities in retail right now, but not so much in office and other. But if you can find a triple net lease, I think it's a great thing. Christophe, hey, Christophe Gardet, pro or against Section 8? I'm against any property that has a high crime score. Go to Neighborhood Scout. If you're a BiggerPockets Pro member, you can get on there for a discount, and you can check the crime ratings. Violent crime, if it's high, you're going to get into a mess. And I can almost promise you that no matter how much profit you think you can make in a Class D property, you're going to be sorry. You're probably going to sell at a discount. You're probably going to get mad at BiggerPockets and me and everybody else. And so just avoid the hassle and don't buy properties in high crime areas. Now, I didn't answer your question at all. Pro or con on Section 8? Section 8 can work really well as long as it's not in a high crime area. Section 8 is, of course, government assisted housing, works for single families, works for apartments. We don't personally like it, but anyway, a lot of people are fine with it, and I've done it before, and it's been fine. It's just not been the best. So it's still hard to collect, believe it or not. Sometimes. Laura Long says, why only 1 property under an LLC? I think it's maximum. It maximizes your accounting, it minimizes your accounting headaches, and it also it gives you maximum protection of liability. Because if you have 5 properties in there and you get sued in one, if they go after the LLC, they can go after all 5 properties. That's my simplest answer. Taylor Weaver, hello. Is school district more important in single family or small multi? I'm going to have to say about the same in large multi as well. So we purchased a multifamily for about $9 million last year in a great school district, and it's been very helpful. So I would say single family, multifamily, school district's important. Crime, in my opinion, is more important. Kevin, you're answering Laura Long. Thank you so much for answering. By the way, if anybody has an answer that's better than mine, keep it to yourself. No, I'm just kidding. If you have an answer that's better than mine, please put it on there. I did a tax session on Saturday, and 2 people had answers that were better than mine. Maybe they were CPAs or accountants, and I would love to get you guys talking, because that's what we're about here at BiggerPockets. We're a community, and we're helping each other. Oh, I just remembered a question that came at the very beginning on Facebook. You said you had good credit and no money down, and honestly, I can't remember who that was. Thanks, Justin. Hey, Taylor. Please give us a thumbs up, a heart, a smile, a like, a share. That would be awesome. Brett, remind me to get back to your question. But if you have no money down and you have a great credit, I would do a lease option sandwich. I'm sorry, I can't get into it for time's sake. But it is an amazing way with very, very little money out of pocket, possibly zero. I've done them with zero out of pocket, where you can actually rent to own a property from somebody in trouble, do something nice to it like plant a flower or paint the door, something, clean the carpet, and then lease to own it to somebody else, and then have the cash flow pay for it and actually give you a nice profit, okay? I did explain it, didn't I? You can go Google that. I don't have any more information on it other than I've done it. Another way is through Airbnb rentals. Don't have time for that as well, but please get back with me if you want to talk about Airbnb landlording. It's something our company is doing with some of our units, our apartment units, and it's more than just doing Airbnb. It's actually a much more in-depth strategy that a friend of mine in Sacramento taught me, and I am so glad because we are starting it now and we are so excited about it, but I don't have time to get into it now. I can just tell you it is way less hassle than Airbnb, about the same profitability, and it is an amazing strategy. So thumbs up if you like that. Angela Hayes, thanks. That's great. All right, William Bush. Okay, somebody asked me another question. I said, make sure you get back to me, and I went ahead and forgot. So Doug, or whoever it was, please get back to me. William Bush, hello from Huntsville. Hey, how's the weather there? Hog Farmer says, if I have a property infested with roaches, should I just do a rent to own? You know, I think that'd be a good idea. I mean, I'd get rid of the roaches, you know, but if you have a property that's like under an electrical line or a cell tower or something else, I think a rent to own is a great strategy, or just putting on a rental program. That's my opinion. Hey, Veganin 2016, Veganin, thank you. You were on Saturday. Thanks for joining us again. Mr. Skills 001, do you suggest getting into Airbnb arbitrage? That's what it's called. If you're starting out, or to be a typical landlord. Oh man, I would so get into Airbnb arbitrage. And anybody who has followed me on some of these other events will tell you that I've been talking about this. I'm so excited. So many of you reached out to me, and I'm a huge fan of Airbnb arbitrage. And so it's basically where you don't own the property, you rent it. Let's say you can rent an apartment for $800 a month. You furnish it. You can even rent the furnishings and put it back on an Airbnb program where you get, like, let's say $2,000 a month gross, okay? Nicole, hey, Nicole, is it better to rent now since interest rates are going up and real estate prices have nowhere to go but down? Nicole, I don't know for sure if they're all going to go down. I made an argument today to somebody that multifamily might not be in a bubble. It just may be the new normal because the demographics are so strong. I would rather be renting. I'm living in this house here, but I told my wife if we move again, I think I'm going to try to rent. I'm sorry, I don't have a better answer, Nicole. You can reach out to me. We can talk more. Jacob Van says, completely new to the game. Where should I start? Airbnb arbitrage, or I would do a lease option sandwich. How to find investor-friendly realtors to help negotiating, Hood Maddox says. Keller Williams. That's my quickest answer, and everybody else can be offended. I'm not a Keller Williams agent. I have no connection to them other than I love Gary Keller and his writings, but they have a lot of good, really aggressive real estate investor type realtors. What is the best way for a non-citizen to start investing with good financing? Hey, Nasser, thanks for joining us. Oh, man, you guys are going to get so sick of this answer. I would start with maybe Airbnb arbitrage or lease to own. Nasser, it depends on your situation. If you're a non-citizen that has $500,000, maybe put it into a syndicate passively, but ask the syndicator if you can join them to learn their business, and they'll let you. But if you have like $20,000, maybe try crowdfunding or the other things I keep saying that I'm sure you're all getting sick of by now. Kevin Williams says, I'm looking to get my first rental property and I'm thinking about using hard money or private lenders to fund the rehab and closing. What should I be aware of when going this route? Kevin, just realize that all hard money is not the same. I know some that are 18% and 3 points, which is effectively at 21% if you hold it exactly a year, and some others that are 11%. That's all I can really tell you right now, although there's a longer answer that we could talk about if we have more time. How can I convert a pig farm into a trailer park, says Hog Farmer. Man, I like this guy. Hey, Hog Farmer. I think you should go to your local planning and zoning commission and ask them. You can also consider self-storage units, which can be built for $7 to $8 a square foot. I'm sorry, that's if you have a building and you're just building out the inside. Or you can build for $35 a square foot, climate-controlled self-storage, maybe up to $45 a square foot if you need to put in the electrical and all kinds of other things. CS, hey, does converting a 5 to a 4-plex just to take advantage of the FHA 203K a good idea? I think Brandon Turner went from a 4 to a 5-plex, but from a 5 to a 4. I wonder if it would be legal, ethical, moral, and wonderful if you could actually keep it as a 4, get the 203K program, and ask your lender, hear me out, ask your lender if it's okay to do that later, if it's okay to convert to a 5-plex after you're in the loan for a year or more. Don't go saying that Paul Moore said you should do that, because I don't know if you should. I'm just saying it seems like it's better. Oh, I said it wrong. It would seem like going to a 4-plex would make sense, and then ask them if you can choose to go back to a 5 later. I think that would be the way to answer that. Rosa Frazier, hey, Rosa. Wow, I'm getting a ton of questions. Patrick, hello from Guam. Question, can I negotiate a PMI with a loan broker? Sam, I don't think you can with most of the time, but you can get out of it early. You should be monitoring that thing, paying for the appraisal 3, 5, 7 years down the road, and getting that PMI taken off. And you can do that. Everybody knows that. That wasn't real smart of me. Sorry. Rosa Frazier says, how much experience would you say one needs before their first flip? I'm a newbie. 3 weeks in. Hey, thumbs up for Rosa. 3 weeks in. Rosa, I think that you should partner with somebody else in your local real estate association and or someone on BiggerPockets. You can meet in the BiggerPockets community. By the way, did you know you can sort? BiggerPockets Pro members can sort by the community, and you can actually see who's in your area, and you can get with them, and you can try to partner with them on a deal. And I just realized I have not read any questions from my wonderful BiggerPockets live audience. So Tracy Pierce says, in a second position, hey Tracy, agent wants to offer no contingency, have not seen out-of-state property, would you do it? Tracy, I'm going to give you a second. Could you just explain that a little more, because I want to make sure I answer your question. If we run out of time, I'll try to answer it afterwards. Thanks. Okay, back to Facebook. Christoph says, better to pay off debt or invest with cash? I can show you absolutely, if you do low risk, medium to high return investing, it's so much better to invest with cash. And I actually don't believe in having a lot of debt. I was $2.5 million in debt in 2008. And during the recession, I ended up being debt free. And I wrote about that on an early BiggerPockets article. But nevertheless, I really like the idea of investing with that cash. In fact, I'm setting up my affairs to do more and more of that myself. And I hate to say that. I hope Dave Ramsey's not listening, because I'm sure he wouldn't like me and probably say something about me that would be not very nice. Cedric Bailey says, will bank refinance properties that are in LLCs versus your personal name before taking on hard money loan? Cedric, if you can rephrase that or maybe add to that, I'll try to answer it. I'm not 100% sure. That last part threw me of your question. The bank will refinance properties in an LLC or your personal name. You will just be on the loan. Your name will be on it. Even if you're in an LLC, you will be personally liable unless it's a non-recourse loan, which a lot of loans, larger multifamily, self-storage, and larger commercial properties can be non-recourse. Kevin Stewart says, you could find a private money lender on BiggerPockets. Kevin, are you a private money lender by any chance? Seriously, yes, you can find a private money lender on BiggerPockets. That's a great idea. Eric Hartley says, local credit union is going to finance a deal for me. If I sell within a year, will they do business with me again? Yeah, shoot, they love it. I mean, if you paid them off and wanted to redo another loan, Eric, ask them point blank. And I think it's telling me that if that's your business plan and you do it, Eric, that you're going to be in great shape. So great question. Thank you for asking that. Hoodmatic says, how do you do evaluation? How do you evaluate the ARV on a duplex? The ARV is the after rehab or the after repair value. And on a duplex, you can do it using cash flow, but the appraisers don't do that. Appraisers would take a duplex and they would classify it as residential. That's 1 to 4 units. And they would look at the comps in the neighborhood. So look at the comps, be conservative, and try to keep your value under the top value in the neighborhood. And be honest. Have some other people in your life, maybe your spouse or friends or a real estate agent. Get 2 or 3 real estate agents you're trying to befriend and give them this assignment of giving you what's called a BPO, a broker price opinion. And that is the best way I would recommend to do that. Ha ha ha, your pocket to mine, sir, says Kevin. Okay, Kevin. Thanks. Christoph, okay, cash out my home. Hey, thanks, cash out on my home. I wonder what you do. How do you comp duplexes as an investor or triplexes? Get a broker price opinion from a realtor and do your own evaluation. If you enjoy this session, please share it. Please like it. Please spread the word. Please give a hearts, thumbs up. We're going to be done here in 5 minutes because it is almost 8:30 Eastern. And Big Time says, I own a vacant house and I want to rent it out. Should I get a private lender or equity line of credit renovations? Man, if you can get equity line of credit, I would do it because it's kind of you already have it. I mean, or if you need to get it, it's something that's a lot easier to get. So that's what I would do. Also, how would you construct the contract? I'm not sure I have an answer on that, Big Time. I think, wait, if you're a BiggerPockets Pro member, I sound like a broken record. You can get access to all kinds of contracts for every state in America. So I would just do that. All right. Uh-oh. You are a good mentor for debt. Oh, man. I never wanted to be known as a good mentor for debt. Thanks. Nilo Furkan, thanks. You can give me a thumbs up for that. Are we able to convert that loan to an LLC loan? My understanding is if you go into an LLC, then you can convert the loan when you go into, maybe not out of, but into an LLC. In fact, my son is getting ready to do that right now. Cedric Bailey says, any info on cap rate for multifamily? Yeah, well, they're real bad. I mean, they're really compressed. They're like 5%, 4%, 3%. I would be willing to buy a 4% multifamily cap rate, which is an awful deal in most markets. If I had a guaranteed path to get it up to 6% or better immediately, like if there's some huge utility bill problem that I knew I could fix, or if there was some huge error on it, or I can't think of a good example. But if I had a guaranteed path to fix the problem within months, I would consider buying below a 6. So, hey, Kevin Stewart says, buy Zag. Okay, Paul, you're awesome. Got to get back to work. Hey, thanks. Okay. What else do we have here? We're about out of time. Dave Ramsey's a POS. He saw nothing wrong in 2008. Well, Nicole, I don't know what a POS is. Oh, yeah, I do. Well, I wouldn't say that, but I understand. Tell about preferred number of units for multifamily. 80 and above will get you a non-recourse loan, and so that's what I prefer. So we can have an on-site manager, non-recourse debt, and there's much better economies of scale. I hope that answered your question. Christine says LLC versus S-Corp. LLCs can actually be done in the form of a corporation or a partnership. I closed my eyes and I have no idea why, other than I was trying to remember this. And you can do either. So I would do an LLC and then make it tax like a partnership or a corporation, whatever your tax strategist says. Hey, did I tell you the best way to save on taxes is to get a tax strategist? That's better than the other 11 ways I went over on Saturday. If you haven't seen that session, check it out. Hey, Brett, I also went over this on our BiggerPockets article, 2 of them. Brett Padrigo says, thank you. Again, any idea on the best team member to find? I just said tax strategist, so I guess I'm just going to go with that. Christine says, okay, got that. Jared says, how difficult is it to go from personal name on a property to an LLC with bank permission? I've heard it's not hard. In fact, our bank was really recommending that my son do that on some properties he had in his personal name. So, okay, we're about out of time. And so I'm going to take 2 more questions. And then Tracy, I'm going to type an answer to you in a minute here. So how to force value. Cedric, commercial, that's 5 and above units, multifamily, you can force value all day long. And I can show you how to increase a $9 million property to $10 million because we're doing it right now. Forcing value means you're not just going on the residential comps in the neighborhood, you're actually creating value by creating more income. In the commercial world, income, net operating income, that is, divided by the cap rate, is the value. So it is an amazing, beautiful thing. Okay, so we're going to get out of here, and we're going to call it a wrap. Tracy, you can email me, paul@wellingscapital.com, with your question when I hit stop, if your question goes away. But other than that, if anybody else wants to email me, you can. Brett says best place to start with $10,000. I would do an Airbnb landlord. So thanks, everybody. I really appreciate this time this evening. Thanks, Zach. Thanks, BiggerPockets. Give us a thumbs up, a like, a share, a smiley face, a heart. I don't know where all those are, but my daughter says they're important. Zach says they're important, and so they are. So, Linda, you can email me that question. Thanks, everybody. We'll see you next time here at BiggerPockets Live.